Brian is with Prospect Mortgage. He is my preferred lender. He's the lender that I trust the most and work with the most because he is a straight shooter and always tells it like it is. So I invited him here to talk about lending in real estate and options that you have if you either are a first-time home buyer and you don't know the system, or if you've got some credit challenges, financial challenges, and also just any other topics. But let's start with that. Okay, so let me give you some mock scenarios. You've got a first-time home buyer. They have decent credit, but not perfect credit. We'll call it somewhere between 650 and 7. They don't have much in the way of down payment. Maybe, under $5,000, and they would really like to get in a home, but they don't think it's something that is possible for them. Is that a person that you could help?
Absolutely, absolutely. So let's say, for instance, if you have $5,000 that you can work with, there's programs available. For instance, there's FHA, which is basically a government program. And they lend up to 96.5% of the sales price. And so, for instance, just for math purposes, if you were to get a $100,000 purchase, we'd all love that, wouldn't we?
Yeah.
You could get a $96,500 first trust deed loan. And then you have closing costs as well. So that kind of makes it a little bit more expensive and takes more. It requires more cash. But what you can do is you can get a concurrent second trust deed. So the FHA first, the 96.5% loan, is a first trust deed. And then what you can do is get a concurrent second up to 3%. So essentially, you're getting a loan of 99.5%. But then you have your closing costs. And there's other ways to address that as well, whether it be a seller concession where they actually help you pay your closing costs, or you can actually have them increase the sales price slightly so that they can are incentive to give you money back to help you pay your closing costs. And for this type of program, you're required only to come up with 1% of cash out of your pocket to close. And so as long as you had, for instance, if it was a $400,000 sale that you're looking at right now, all that's really required is that you come up with 1% of that amount to qualify for this type of program. And that's called a CHDAP, Cal HFA. And it's a fantastic program to where you don't even have to make a payment on that concurrent second. So you get, let's say, for instance, again, let's use that $400 or $100,000 loan amount scenario. You could get an additional second of $3,000 that you don't have to make a payment on at all. And then the only time that you have to pay that back is when you refinance the property or when you sell the property.
Chuck, I'm really excited about this endeavor that Kristen's taking. I'm really happy for her to take a year off. I'm really excited that she felt we could take care of her clients.
Yeah, she deserves the time off. For sure.
Yeah.
Yeah, and it's a big undertaking, but
it is.
Yeah, and to maintain her
Well,
level of service and what she's been doing for her clients will be a lot of work, but I'm looking forward to it. I'm happy for her as well.
It takes two of us to take your place.
Yeah, and it could take even more, but
we're
going to give it a shot.
It could.